And welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm here to give you the latest in FX markets, key events coming up, and some key charts to watch. So today we're kicking it off with something a little bit different. We're going to take a look at the big story first. Obviously, the big story in the markets at the moment is the US and Iran war. We can see that there has been some recent developments through this. Again, last night, obviously, there was a continuation of the strikes, as well as Trump saying that they will expand military operations against Iran. So he's basically undecided if it's going to be a full-scale combat and whether there's going to be troops on the ground, which is obviously an elevated state of escalations between the US and Iran. There are two options on the table. You can see here, it says that senior US and Israeli officials are claiming Trump has only two realistic options, either prompting a 10-day ceasefire with the aim of reopening the Strait of Hormuz or launching a full-scale war. So it's going to be interesting to see how this one develops, and the market is trading on a little bit of a knife edge at the moment. We can see that if we go to the volatility index, volatility spiked yesterday up to at least 19.4 and has since kind of come off that area there, but volatility remaining a little bit on edge. If we take a look at the US dollar performance across the board yesterday, it was bullish. Market closes daily higher after rejecting down towards the Friday lows of 100.60. If we take a look at how the stock market was affected by this yesterday, the US 500 came in, closed lower on the session. The Nasdaq closed bullish on the session, but still remains at sort of a bearish move here, just coming into some key levels of support. Gold found a little bit of support, stayed at that $4,000 level, broached higher, and that's all to do with the fact that we are seeing yields starting to come in a little bit lower once again. So keeping an eye on the sort of complex there of the risk sentiment and the risk snapshot of the market, we can actually see that it's still a little bit sort of mixed. And today we're starting to see some oil downside, and we'll talk about oil on the chart check, just some key levels to have a look at and to watch for today. But obviously this is going to be something that we have to keep an eye on. We also have to keep an eye on tariffs currently in the markets as well. Trump announced a 50% tariff on Canada recently, and that's due to the fact that they are not stocking as much products from the US, so he's trying to force them by putting tariffs into play. So a lot going on in terms of geopolitical news and tension in the markets, but we still have to consider that there could be some kind of ceasefire coming in place. There was a report here on News Squawk as well that it was Iran who proposed the 10-day ceasefire, and the US said to be demanding a longer ceasefire and demanding even partial navigation of the Strait of Hormuz. So the goal is 10 days, according to two sources, and it's to find the solution for the Strait of Hormuz. Now, Iran have been very vocal about not wanting to give over control of the Strait of Hormuz, but it looks like they're going to have to do something to kind of prevent the US from going into a full-out war in Iran, which many moons ago was probably the plan put in place, especially from the Israel side as well. Israel obviously battling with Hezbollah, and Iran got involved because Iran usually fund Hezbollah. So there has been a situation that has been growing there. So from an Israeli point of view and Benjamin Netanyahu point of view, that's probably something that he's wanted the US to continue to try and get involved with this battle. But, there was the ceasefire for X amount of days. That has obviously not worked out for President Trump, as he obviously wants to sort of, create a sort of, a Strait of Hormuz situation where he wants some kind of control over that. So there's been a lot going on in terms of that. We've got a lot of reports this week, a lot of earnings coming out this week as well in terms of Tesla and IBM and things like that. So we've got an interesting sort of development that could happen over the next few days. But the big story is going to be, are we going to see a full-scale war in Iran, or are we going to see that 10-day ceasefire coming into place? Now, there is a saying in global markets that's been coined by many analysts and things like that, which is called the taco trade, which is Trump always chickens out. So there could be an element of the market seeing more of a move towards the 10-day ceasefire. Obviously, as well, the inflation story is a big story still. And if we do see, oil prices, break $100 and move higher, then that's going to play into the eyes of inflation. And can the Federal Reserve cut interest rates on that? Because that's what Donald Trump ultimately wants. He wants interest rates lower, because if interest rates are lower, the government debt to pay back is lower too. So their payments on their debt is much, much lower. So essentially, he wants lower oil prices. So how is he going to get that? How is he going to get that control of the Strait of Hormuz? Is it so that he can allow it to be a bit more free flowing? The supply, OPEC and people have recently agreed to increase supply in the markets as well. So we're starting to see that sort of supply issue not necessarily being, being too much of a problem, but, it's the geopolitical tension that is really driving prices here at the moment. So let's move on to the chart check then. So the chart check for today was going to be oil, and it was going to be how to trade oil and the key levels that you can really watch out for on oil prices. Now, there with Anzo Capital, you can see that I've put a QR code in the top left-hand corner of the screen. That is so you can go to the website and have a little look at some of our pricing there. We have some very, very competitive commissions when you trade in oil prices, so make sure that you check those out. And if you do want to join our Telegram channel, here is the QR code for that too. So we have two QR codes on the screen. The first one was the website, and the second one is Anzo's Telegram channel. So if you do want to join that there, keep up to date with the latest stories, latest markets that have been moving, then head over to our Telegram channel. So let's have a look at some key levels for oil. And, the chart check today was how to trade oil. And we trade oil very similarly to most, but oil is a very different market to most because it is driven by supply and demand. It is driven by risk and risk off within the markets. And it's usually a very good barometer of the risk sentiment within the market. Usually, if the market is in a risk on mode, oil can expand on that. Risk on could essentially mean that there is more global trade happening, X, Y, and Z. So it's usually more bullish for oil prices because that supply is being met by demand. When we see that kind of rollover and we see risk off, big, huge event that we can obviously point back to was 2020, where we had a huge risk off event where pretty much global trade stopped overnight. And we saw oil prices within that 2020 period move from being $59 priced all the way down just at $6. And in some liquidity providers and brokerages were even highlighting -$1 per barrel, which is just absolutely insane to think about. But that is a good example of showing you that in risk off scenarios, oil prices can fall too. So there is an element of risk on, risk off when it comes into play. And obviously in a risk off scenario, we do see oil kind of come off a little bit. But it depends what the situation is. Obviously, this time we did have a big risk event, but oil prices climbed and rallied, and we went from $67 a barrel all the way up to $120 a barrel because it is specifically an oil supply story, especially because the Strait of Hormuz passes an X amount of percentage of oil every single day. So that became a supply issue, and the supply was constrained. oil prices moved to the upside. So there's a few factors you have to keep in play. The other thing that you need to look at when it comes to oil prices is looking at your latest OPEC reports. Okay, now OPEC control the supply of oil, and you can do something really easy. You just Google OPEC news, and you'll get the latest, information of what OPEC is doing. And once you kind of look at the supply and the demand there, you usually see some decent moves in oil as well. So let's say OPEC Plus come out and say, the OPEC nations are going to start increasing their production. That means there is an increase in supply. That usually leads to oil downside. If they say that they're cutting production and they're going to slow down production, that means they are trying to control the supply, and we usually see demand for oil then and demand for oil prices, and the price can go up. So you've got those two factors at play when it comes to oil. At the moment, the driver is the geopolitical tension. So if we do see escalations further, then upside is more likely. If we see a de-escalation and a 10-day ceasefire, then we're going to see a little bit of downside. Okay, so that's the two scenarios really at play here. Now, when we look at it from a technical position, it can be quite difficult to kind of map out these areas. But what I'm looking at is, first of all, I've drawn an adjustable market profile from the highs that formed on the 18th of May all the way down to the lows that formed on the 6th of July. And that downward period there, you can see there was a couple of key levels. So first of all, we have the value area low, which is 84.70. And this is WTI I'm on at the moment. We have a point of control up at $95, and then we have a value area high at $108. Now, when I use the adjustable market profile on a downward trend, I'm basically looking for those key areas of support and resistance for the trend to resume, right? Or areas where we could see a little bit of just, contact. So the value area low at the moment, around about that 80, 84 sort of 50 area, has acted as resistance, right? We gapped up into that level over the weekend. Price has fallen from there and looks to be continuing to move to the downside forward. Now, situation number one, if we do see the escalations continue and war break out between the US and Iran within boots on the ground, then breakouts of that value area low could be likely, and we could see a move up towards $95, which is that point of control area through there. The second scenario, if we do see the ceasefire come in place, then we could see a little bit more downside, pushing prices back down towards those 6th of July lows, which is around about $68 per barrel. When I'm looking at the market today, obviously there is still a bit of that risk premium around. So what I did was I actually mapped out last week's market profile area, and I was looking for key areas of support and resistance. And the value area high came in around about $81. And we can see yesterday price came into that, rejected it, and moved back to the upside. So these levels can be quite good even in these volatility periods, because it shows us where the most action has been had within the markets, the high volume, the low volume areas, and that can act as key support and resistance. And you can see from this chart, this 30-minute chart, that we did see that yesterday. So what could happen today? Well, if we do see some downside, then maybe the point of control of last week could be tested, and that is at $79.60. If we do see a continuation, how do we trade it, right? Can we trade the downside? Now, what I like about using market profile is we can, look at what happened yesterday. We can draw a market profile over yesterday. We can see currently we're trading within yesterday's value area. And when that happens, price can be sort of sideways, right? We can see some kind of, day where we don't get any kind of breakouts. But what it does give us, it gives us an idea of what could happen. So currently we're testing yesterday's point of control. That area is 82.20. We've got the value area low at 81.60. So first option or first idea is if we do think that the escalations are going to continue, then maybe we want to be more on the buy side, right? So if price comes down into this level here, we can go down to a lower time frame. Let's say the 5-minute time frame. Look for kind of our reversal pattern to that point, maybe a double bottom pattern, inverse head and shoulders pattern, something that suggests that actually buyers are coming in at that value area low. For targets, we're going to target kind of current day areas. So around about 82 to $83 would be first target. Second target could be yesterday's value area high, which is trading around about $84. Okay, so if I just add another market profile on the screen and just look at the current session that we have right now, the point of control is at 82.70. Okay. Now, if you are an intraday trader, a scalper, short-term time frame trader, then this can also be helpful to you because you could be looking at, okay, well, price has consolidated throughout today, right? We've accumulated pretty much within yesterday's value area. Price has broken out of this point of control, out of this accumulation, out of this value area on oil. Maybe, just maybe, we could get a rally into today's kind of value area, a rejection and a continuation to the downside. Okay, and if we do get that, that's your trade plan for the day. Easy stop losses can go above the value area high or above the current day's highs, and that will still give you a potential trade for a move to the downside, right? So if let's say we shorted at value area low, stop loss at value area high, that's still a 2-to-1 reward to risk ratio down to yesterday's value area low. If you wanted to try and take a little bit more off of that and you can try and trade at the point of control, that would mean that the value area low would be about a 2.2R, 2.5R trade. You want to be a little bit safer. You can put your stop loss above current day's highs, but that does reduce your reward to risk down to about a 1-to-1. So there's a couple of options for you there, but you have to understand, or you have to figure out what type of market you're trading, what type of time frame you're doing business on. How can you try and trade that information? Okay. Yesterday we had a really nice move in terms of price came in. It rejected the value area of the week, and it rallied back to the upside. It then broke back into value. So that would have been a nice trade of looking for that kind of value idea. You can see point of control shifted to the downside, but we still broke a little bit higher in that day. So it looks like the sentiment really is, to me, is still a little bit more on the bullish side. So I wouldn't necessarily be looking for aggressive shorts. The only aggressive shorts will come into play if we were to break back down maybe yesterday's value area low and even the previous weekly value area high at $81. If we break below that, that would lead me to suggest, maybe we could see a move down towards that point of control of last week, which was around about that 79.70 handle. If price does move higher and aggressively and breaks out of $85, then that means that probably we are going to go see $95. And that means that the escalations have continued and something big has happened. So keep an eye on that going into your markets today. We have some big news as well. So instead of doing the skill of the day today, I do want to go back to looking at another big story within the markets. And this is something that we spoke about yesterday, and that is that we were looking at a potential idea on pound against the US dollar. Okay, and the reason why we're looking at this move on pound against the US dollar is because we had a really nice commitment of trader reports signal. We've had price come back into a key level of structure as well. If I just go to this daily chart here, we can see we come into the previous daily highs at 134.50. So I'm looking for a potential continuation of this move here. The oil story plays across this too, because that means that, if we do see an increase in, those oil prices, then the dollar will likely get a little bit of support too. And that could still push pound US dollar prices lower in the near term. So that's the risk that we're playing with trading this type of market in particular. But from a technical point of view, we're back down. We're in that phase 2, right? So remember, we're looking at the daily phase 1, phase 2, phase 1. And we're looking for where that phase 2 could turn back into the phase 1. So I like to look at lower time frame breaks in the trend. At the moment, 4 hour is creating lower highs and lower lows. The recent lower high was quite shallow though. It didn't really go anywhere. So that can tell you that maybe there are buyers starting to flirt with pound US dollars at that 134.25 handle. If price breaks out of this trend line resistance that you can see that I've mapped out from the high, anchored it to the area here, then I'm looking for a potential higher low to look for an opportunity to trade. So I'm going to keep an eye on pound US dollar here. I think that there's a good idea that we could see a little bit more upside. Now, interestingly enough, yesterday we announced a new prime minister in the UK. We've got Andy Burnham is the new Labour prime minister and new Labour market leader, and he's announced his cabinet yesterday. So former Chancellor Rachel Reeves has now left. And obviously Rachel Reeves was on about raising taxes and X, Y, and Z, maybe tightening things in the UK, versus Andy Burnham, who's now coming out and saying that they're not necessarily looking to tighten anything. They're actually more looking to loosen economic conditions, which can obviously promote growth. UK gilts fell, which is basically the UK bond market. They fell, yields rose. So usually when a country's yields rise, we can see a little bit of an influx into that currency, right? So the UK gilts have come in lower, seeing that yield rise. So I do like that situation going on here in the UK. But I'd like to see the conditions match up now. Remember, it's the WCS method. It's why do you want to get involved with this market? Do the conditions then line up? Then can we apply a strategy? Do the conditions line up here at the moment? Yes and no. Yes, because we have the upward daily trend. No, because we're in the phase 2. So we're in alert mode. We're waiting to see, can price break out of this area here? And if it does, can we get a higher low on the 4 hour time frame? Then I'm going to go switch into strategy mode. I'm going to go to my lower time frames, looking for those lower time frame breaks in trend for opportunities to be a buyer on cable. So I'm gonna leave it there for today. No skill of the day, but there's a couple of stories out there at the moment, which is moving markets. We have obviously the US and Iran war situation. We also have the UK Prime Minister situation, choosing his cabinet, choosing what happens with future budgets, which is going to be something that we need to keep an eye on going forward for the UK. But pound US dollar setting up in a really nice way. We talked about how to trade oil today as well for the chart check and the key levels to look out for. So thanks for watching the video today. I hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you are new here, and I'll speak to you soon.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.